Ivy Zellman, she's, coming out with her brand push right now, but she was one of the famous people that called the 08, 2010 crash a little early. She called it in 06, so a little quick to the game. But she is one of the most fantastic real estate analysts in the market today. And when she looks at all the sectors, basically she's bullish on all of them. To your point, the one where she's most concerned are on these forced equity deals with the existing structures. They pick up the building at a 7-8% cap. I'm sorry, a 4 to 5% cap, or improve rehabs, sell it at a 7-8% cap. Or at least hold it at a 7-8% cap. If you think about it as a cap rate, and this is where we get lost in the variables and whatnot, lower cap rates, 7, 8, even 9% cap rates means lower margins in deals. Margin is essentially a risk hedge. The more margin you have, the more risk you can take on, and the more chances of downside you can absorb. Well, she is very scared of these multifamily projects that you were mentioning, because one mistake or one slight downturn in the market and you're going to be back in the red. And I think that's when I look in the market and we're looking at deals constantly, we're only picking home run deals. And those home run deals tend to be with ground up development, whether it be multifamily, single family, what have you. But I am pretty bullish on, to your point, most sectors. I think there's some risk in traditional commercial, depending how you look at it. But you know how it goes. There's unique commercial buildings coming to market where it's these sort of co-op working spaces, these outside coffee shops and all that. So the markets are changing, and generally, I think they're probably right. Across many sectors, there's a lot of tailwinds and a lot of bullish indicators. One of the most important is the cost of capital, which, to your point, is absurdly dirt cheap right now.
Yeah, it is really cheap. A couple other sectors that we've talked about from time to time: student housing. You look at the macro trends there of the demographic growth. They were looking in areas like North Dakota, which is seeing 25% more college grads over the next 10 years. In DC, 15% more college grads by 2030. So definitely a lot of demand on student housing. Look, everyone has thought that the baby boomers have been the largest population, and they were, but it's the millennial population now. And here's what's interesting about the millennial population. A, they make money. B, the oldest millennial, and I believe I fit in that category, we have not reached our peak earning years. And those peak earning years are from ages 45 to 54. So imagine
I can't wait.
Imagine me either. I'm waiting for my peak earning years. So, over the next, 5 years, the upper end of the millennial population is going to be in those peak earning years. Their families are growing. They're going to need more housing. They're going to spend more money. All of this bodes really, really well for all parts of real estate. Another interesting sector: industrial. Warehouses are completely full. Everybody sees these news headlines about all these shipping containers that are stuck off the coast of California. Well, guess what? They need to go somewhere. Okay. Warehouses are completely full, and we are in the very early stages of next day shipping.